Students, welcome to accountancy class. I am NARSIMULU, commerce teacher. Today I am going to teach you CEC first year accountancy in the topic journalizing business transactions in the book journal. Students, you all know that there are three types of accounts. One is personal account, second one real account, third one nominal account, and these accounts have their own accounting principles. First one, personal account. Personal account principle is that receiver account debit, giver account should be credited. Whereas come to second account, here real account. Real account principle says that debit what comes in, credit what goes out. And third account, that is nominal account. Nominal account principle is that expenses, losses, cost should be debited, incomes, gains, profit should be credited. So these are the three accounts and their principles. And you are all know that we can go to analyze the accounting transaction based on dual aspect concept. So applying dual aspect concept on the business transaction, we need to identify two aspects. So here, if you observe this transaction, January 1st 2018, goods purchased from X for cash rupees 10,000. It is the transaction. Okay, students. So while or in order to identify two aspects in the given business transaction, we have to ask some questions in our mind. First, you ask yourself a question that is there any name in the business transaction? Yes, there is the name. So after finding that, you make it underline. The name should be underlined. It is one aspect you found. And come to second, you ask one more question in your mind, that is there any income or expenditure in the given transaction? Students, here if you observe, there is no such income or expenditure. So keep it aside and ask one more question, that is there any asset? Yes, if you observe, goods is an asset. Okay. And one more thing also is there, cash. So both are assets, and in this transaction there are total three aspects. So it is a tricky point here. We need to select only two aspects, and we must ignore or omit the third aspect that we find in this accounting transaction. See, goods purchased from X for cash. Remember one thing, if you find in a transaction three aspects, if there is the cash and the name of a person, so you can go to simply ignore the name of a person, and you must not give any importance to the name of a person when you see cash along with another aspect in the given transaction. So here there is no important for the name of the person in this given transaction. Now come to see goods and cash. Two aspects we find, and goods is an asset. Goods is an asset. Okay, students. And come to cash. Cash also related to asset or comes under real account. Okay, so two aspects we find. One is goods purchased, another is cash. Right, come to see assets comes under which account? A real account. You write here a real account. A real account. And what real account principle says? See, real account principle says that debit what comes in, credit what goes out. So here, when you purchase the goods, goods are coming into the business or going out of the business. You think about it. Whenever you purchase the goods, or the goods coming into the business or going out of the business. Yes, coming into the business. As per real account principle, what comes in, that should be debited. Comes in. What comes in here? Goods. Goods purchase. Or you can also write purchases account. Both are accepted. Goods purchase or purchases account. Both are accepted. Debit. Okay. One aspect process we completed for writing the journal entry in the journal. And come to second one, cash. Cash is asset. Assets related to real account. So what real account principle says here? Real account, what real account principle says that? So here real account principle says that debit what comes in, credit what goes out. Listen, you can observe here, when we purchase the goods from for cash, so here you ask one question in your mind, is cash coming into the business or going out of the business? So when you purchase the goods, generally we are receiving goods and giving cash. So when we giving cash or paying cash, cash is going from the business. Is it right? So whatever goes from the business, that should be credited as per real account principle. So here you write goes out. What goes out here? That is cash. Goes out. That should be credited. Cash account credit. Cash account credit. After finding debit account and credit account, we need to write a journal entry in the book journal. So here remember one thing, this process should be completed in your mind. After finding debit account and credit account, then only you can go to write the entry in the journal. See, January 1st 2018, in the date column you can go to write. And here you see which account is debit, goods purchase account. So here you can go to write as goods purchase account or purchase account. Both are accepted. Students, it is for understanding point of view, I am writing here goods purchase account debit, or you can go to write as purchases account. Both are accepted. And in the debit column against this account amount, you can go to write rupees 10,000. And come to next one, which is the credit account here. Cash account is the credit account. So write cash account. In the credit column, rupees 10,000 against this account. You can go to write. After writing amount, you can go to write narration for the transaction. Well, how we are going to write the narration? You observe here, being goods purchased for cash. Goods purchased for cash. Okay, students, it is the cash transaction. And remember one thing, when it is a cash transaction, we must not give importance to name of a person even if we see it in the transaction, because here in the cash transaction we give importance to cash. In the credit transaction, generally we won't see the word cash, then we consider name of a person. In the credit transaction or credit purchases, we give importance to name of person. In the cash transaction, we give importance to cash. Keep this point in your mind. So generally we will get three aspects in cash purchases or cash sales. So there we can go to simply ignore the third aspect, the name of a person, when it is a cash transaction. Okay, students, once again we can go to observe that first you must know three types of accounts and their principles, and you must be aware of dual aspect concept. As per dual aspect concept, we must identify two aspects in the given business transaction or accounting transaction. After finding two aspects, we can go to identify the nature of aspects. Is it asset or income or expenditure or name? So here we identified the nature of aspects. One is asset, another also asset. Both are assets in this transaction. So assets related to real account. So real account principle, we can go to write real account. Okay, what real account principle says that should be here what comes in debit, what goes out credit. So comes here goods comes into the business when we purchase, that should be taken here. And applying the principle, and we find the debit account. Here applying the principle we find credit account. Okay, so after finding debit and credit account, this process should be happen in your mind. This process this thinking process should be happened in your mind. Keep this point, or you can go to do it for practice point of view in your rough notes, and come to write the journal entry in the journal. How we are going to write the journal entry? See, 2018 January 1st, goods purchased, purchases account, debit. In the debit column, again is this account, amount 10,000, and come to credit column or credit account, to cash account. In the credit column, amount rupees 10,000. Narration being goods purchased for cash. Okay, like this we can go to write the journal entry for the given accounting transaction. Students, I hope you understood how to write the journal entry for the cash transaction. Thank you for watching this video.